Welcome back to Power CEOs, the truth behind the business. If you're just tuning in, you're going to want to go to nowmedia.tv, click on shows and catch the first half of today's episode because it was pure gold. We talked about becoming a for-profit organization and what does that mean for your scalability. But now we're going to switch gears. Buckle up, folks. You have asked, I am answering. What do we do once we have had our scale, our success, our exit in business, and we want to start investing in multifamily real estate? Well, I have your answers today. I have with me today in studio Robert Martinez and Jason Weilee, and they are going to give us all the details on multifamily real estate. Welcome to the show.
Hey, thanks so much for having us.
Thank you so much, Jen.
So guys, multifamily, I know it's been a wild ride the last couple of years with everything that's happened in real estate, but you are on top of your game. Yep. You are successful. You have not, it hasn't even caused you any sort of ruckus like a lot of things we've heard about on the news. So talk to us about what is it that we want to be looking for as investors getting into the real estate game?
Well, you're looking for something that's an alternative to your everyday investment strategy. In high school and in professors in college, what do they teach you? They teach you to invest in your 401k, Roth IRA, and that's the traditional way. But no one ever talked to me about multifamily investing. Nobody ever explained to me that I could actually own a piece of an apartment building or a potential office complex. And I think these are just alternative strategies that a lot of everyday investors never thought that they had the experience or not the understanding, but the access to invest. And they just thought, whatever's in my 401k is what I can invest in.
Yeah, I had that experience too, and I was in medicine for 20 years, and you're not taught business in medical school, by the way, just in case you were wondering. You have to learn the hard way, but you're not taught what to do with your income or how to take your income and turn it into wealth. And then they tell you put it into 401k and it's going to be great. Well, you can only put so much money into a 401k, and you're absolutely right. Our financial advisors don't chat to us about alternative investments. Jason, I know you're a big fan of this. I saw you on stage. Actually, we shared a stage last year. Talk to me about what you're seeing and how you guys are able to ease the mind of, the other entrepreneurs, the professionals who are looking to invest with you guys.
Yeah, so I think one of the biggest things about multifamily real estate that we love is that it's a tangible asset, right? It's something that you can actually drive up to, see the improvements that are being made, all the value add opportunities that we're creating for our residents, and ultimately it's going to benefit for investors versus something that might be a paper investment that's much more volatile or fluctuating. And so, of course, we always recommend our investors focus first on educating themselves as to what they're investing in and just really understanding the valuation aspect of how multifamily is much more different than single family real estate. I know that, a lot of people, when they want to get into real estate, they focus on buying, just some single family homes, fix and flips. But the true power with multifamily investing is that we are able to value our properties based off the income that it generates versus just the comps, sort of like how a single family home would be valued.
And your firm, correct me if I'm wrong, you've raised over $191 million and returned over $130 million to investors through distributions, refinances, and exits. That's huge, and that's a really good thing for those of us who are the money, giving our money to people such as yourselves, for us to sort of look at and mitigate our risk and have an understanding of what your track record is. Your track record is phenomenal. What are some of the things that you guys would recommend our professionals out there looking to invest in this asset class to do from a due diligence standpoint? What kind of questions should they be asking, for example, Rockstar Capital?
Right, so again, we're taught to invest in the stock market, and we're told that the average return is somewhere in that 6 to 8% range. But they also tell you that if you don't leave your money in the market, then if you miss those specific days where he was having the best day, your returns will fall to 2 or 3%. Is that enough for you? Number one, are you willing to work 30, 40 years at 6 to 8% and see, is that going to get you your is that going to hit the goals of your investment strategy? And multifamily, our goal is to 2x your money in a 5 to 6 year time frame. And so if that fits more, then that's number one. Number two, you get a lot of depreciation. It's not about what you make, it's about what you keep. In the multifamily world, we have what's called a cost segregation study, which is an advanced way of just saying a lot of depreciation. And so it can really offset a lot of the gains that you have in multifamily where you don't have that aspect in traditional stock investing. So being able to have that cash flow right? Because we're also thinking that in the long term, we want to invest in a growth stock. Well, most growth stocks don't have a dividend. In a multifamily, you're investing in an asset right now that as part of that 2X strategy, you're going to get in a 5-year horizon. You're going to get a piece of it in a monthly or quarterly distribution schedule, and then also a big nut at the end, right, where you sell and you get this huge, windfall at the end.
And so talk to us a little bit more about what do we need to qualify? Do we need to be accredited investors? And if so, what does that mean? Because a lot of times we're entrepreneurs, we're great at making money, we understand cash flow, you're speaking our language. It's about how much you keep, not about your top line revenue. That's what our income is based upon. So you're speaking our language, but some of the other terms that we hear are sophisticated versus accredited investor, and how do we know whether we are in one of those categories and whether this is an asset class open to us?
Right. So the accredited investor definition is something set by the SEC, and one of the most, the two easiest ways to qualify is either through income or through net worth. Through income, it would be if you're making $200,000 a year or more and have so consistently for the past 2 years and expect to do the same, or if you and your spouse, file taxes jointly, it'd be $300,000. The other way would be through net worth. If you have $1 million in net worth, excluding your primary residence, you're automatically considered an accredited investor. There are a few other ways to qualify, but those are the two main ways. And the differentiation between being an accredited versus non-accredited investor is the type of deal opportunities that become available to you. Some certain multifamily deals are only available for accredited investors. A lot of times that is when we're setting up what's called a 506C syndication offering, where we are advertising that investment to the general public, we're soliciting, and so the SEC requires us to only work with accredited investors. But that doesn't mean you're doomed if you're not quite accredited just yet, because there are certain opportunities that do allow for non-accredited investors. And so the first thing is becoming what we call a sophisticated investor, meaning that you are educating yourself about multifamily investing, you're educating yourself about business, finances in general, and can make that informed decision.
And so I'm going to ask a question. So let's assume that we're ready. We have the opportunity to invest. I'm an accredited investor. This is open to me. I've never invested in multifamily before. Okay. So if that person watching, they're making good revenue, why should I give you my money at Rockstar Capital?
Well, I mean, first of all, it's supposed to be passive for you. In any other investment, whether you're going to do a flip house, you're going to have to be involved. You're going to be an active investor. Does that fit your lifestyle? Are you a 6-figure earner? Are you a 7-figure earner? Do you have the time to do this on an everyday basis? If you don't, then you want to find people that can take care of your money. As you mentioned before, we've raised $190 million. That wasn't in one time. That was over a lifetime, or practically feels like a lifetime, 18 years of real estate experience where you're doing one deal a year, couple of deals a year, then you start ramping it up. So you only get to do that if you're returning capital back. We returned over $130 million of our investors' capital, and we still own a $600 million portfolio with those investors. So you just got to start qualifying who it is. What is your track record? What have your wins been? Hey, what are your losses? You got to talk about the losses. Everybody has losses. Just because they don't talk about it doesn't mean they don't exist. So what are your losses? Do I understand what happened there? What did you learn from that? And then what is your ability to return my money back to me, right? I think it's Will Rogers that once said, is it Will Rogers? Maybe Will Rogers. Well, I think it was Will Rogers that once said, don't talk to me about the return on my investment, talk to me about the return of my investment. Mm-hmm. So how many times have you gone from cradle to grave and been able to purchase an asset, return it back to them, hit all your goals, and everybody's happy? That's an important thing. A lot of people in the last 3-4 years, this became a very hot sector, and you have a lot of people that came out of the woodwork to do this. Guys that were off my back, right? The success that we had, taking advantage of that. And then what happened? The first crash, the first correction, the first reset of things, they were upside down. They were gone. They didn't know what to do. They put their head they put their head in the sand like an ostrich, not knowing, hey, where do I go for help? How do I handle this? Having done this since 2007, I've seen a few markets, I've seen a few corrections, and it's been, outside of the last 24 months, a pretty good ride. But now, the strong survive, the cream of the crop rise, and you're able to overcome, the pitfalls that happen in everyday life. And then where are you at today? Are you positioned now to get back on the saddle, positioned to get back into your business plan and still hit those returns?
Well, just like any business, every business has cycles. We all have cycles no matter what business we are in. We have to be able to be fundamentally sound. And why I brought you guys on is because I saw that you are fundamentally sound. You operate your investment portfolio as a business, and not all do in this industry. So talk to me about how did you get that savvy and that financially sound foundation so that you can operate as a true all-inclusive business for yourself and also for your investors?
Yeah, it's a great question. I think there's an expression I like to use: before you invest in anything, invest in yourself. Invest in education. I was very fortunate. I live in Houston, Texas. There was a real estate club here that I was able to purchase education and time. It was $10,000, and it was the best $10,000 I ever spent in my life in '07 because it completely changed my family tree. But I was introduced to how multifamily works. And then it's own your own personal background. I have a sales background. I was a sales manager over a series of sales guys. So there's organizational skills, there's training skills, and then some of it just comes with natural, organic growth. I think I need this person. Hey, I'm missing this person. In the beginning, you wear all hats. And as you grow and you start to grow, you start, okay, what can make my life easy? Well, I'm going to bring this person in that's going to bring 40 hours back to me. What am I going to do with those 40 hours? Well, and then I learned social media. Then you learn marketing. Then, okay, now I've learned those. I need to focus more on operations. Let me bring in a social media guy, or let me bring in a sales trainer. Let me bring in another ops person. So you just start to grow organically. Next thing you know, we got a 130-person management company. And then you got to learn how to handle people. We don't talk about HR a lot, but real estate's easy. People are difficult. How do you handle people? And I am HR for my company. I don't have an HR. I had that once, and it practically created my business. I bring two people in. I go, you guys got a problem? Let's figure this out. Sue said, hey, you're doing this. Sally, what do you think? How can we figure this out? And then can we work together? Let's shake hands and go to work. Just like being a coach. You just got to just listen to everybody, hear the issues. Okay, now, once I've heard your issues, now you're going to hear what our business goals are. This right here is a waste of my time, right? We are not growing by trying to solve why you're upset here. Let's figure this out and let's move forward and let's grow our business together.
That's fantastic. We do have to take a brief break, but folks, stick around because we'll dive deeper into this after these messages.